Hello and welcome to our weekly review of the crypto market. Despite the challenges of 2022 for the crypto industry, Bitcoin became one of the best performing assets in the world, according to the latest data by Goldman Sachs. By the way, the banking giant used to be a big critic of the flagship cryptocurrency. That makes the bank's recognition of the coin all the more valuable. HSBC, one of the largest financial conglomerates in the world, is looking for crypto assets and tokenization staffers. The job offers are currently being advertised on the bank's website. Notably, in 2021, the company blocked transfers of its clients to crypto exchange accounts, seeing digital assets as not transparent enough and therefore carrying greater risks. Nevertheless, the giant bought a plot of virtual real estate in an online gaming space called the Sandbox in March 2022 and filed trademark applications for a range of digital currency services, including those related to the metaverse and NFTs a couple of months later. Meanwhile, Goldman Sachs included Bitcoin in its returns reports in 2021. It then launched a range of crypto services for clients on the back of digital gold's growing popularity. The Goldman Sachs report shows Bitcoin's year-to-date return at 27%. The bank also gave the coin a risk-adjusted ratio of 3.1. Bitcoin outperformed the S&P 500, the Nasdaq, gold and real estate, according to the report. Moreover, the flagship cryptocurrency performed better than the MSCI Emerging Markets Index, 10-year U.S. Treasuries, and a number of industries including IT, energy, oil, finance, construction, healthcare, and so on. The stance of the U.S. Federal Reserve and other leading central banks on monetary policy became the main driving force for markets in 2022. Fighting against hot inflation, they had to take aggressive measures which caused outflows of liquidity from risk assets, including cryptocurrencies. That in turn revealed the insolvency of a number of crypto projects. Most of them have already left the market, others had to file for bankruptcy. Meanwhile, CEO of some crypto exchanges such as FTX and Bitslato were arrested on multiple charges. Now let's find out how the Federal Reserve's interest rate decision and Chair Jerome Powell's comments influenced market sentiment. The regulator raised the rate by 25 basis points, but the move had already been priced by the market. However, the American Central Bank is not going to end this tightening cycle. We will need substantially more evidence that inflation is ebbing to be confident that it's moving back towards the target, Powell said in a press conference following the meeting. At the same time, some economists believe that the Federal Reserve might pause hiking rates after a meeting in March. In such a case, demand for risk assets could increase, especially on the back of high inflation. All in all, 2023 could become a period of growth in the crypto market. After all, in January alone, Bitcoin gained 40%, showing the best start to the year in a decade. Notably, there were several bullish factors that helped the coin to recover after the collapse caused by FTX meltdown. The fact that the token surged to $23,000 sparked no reaction shows that market players believe in its further growth. At moments like that, there is little noise around Bitcoin. In the meantime, the fear and greed index has been in the greed zone, 50-74 all week, and has approached 68 today. The higher the index, the stronger the bullish sentiment in the market. On January 26th, Bitcoin traded at a peak $23,588. The following morning, it plunged to a weekly low of $22,644. On Thursday, the price hit a weekly and monthly high of $23,897. On January 30th, the Bitcoin network saw a historic amount of profit-taking. The quote instantly retraced down to the range of 22,670, but then showed moderate growth with high volatility. After the Federal Reserve's rate decision and Powell's comments, the US dollar index nosedived to 101. Meanwhile, Bitcoin spiked to 23,687. In order to extend the bull run, digital gold should reach 30,000. However, the coin may again be caught up in the same trap. It remains to be seen where the price goes when traders lock in profits again. Ether has also been on the rise. In a month, the price increased to $1,622 from $1,217. In January, Ether attempted to break through the mark of 1,688. It may well be that the coin will approach this high in the coming days. After the FOMC meeting on Wednesday, Ether soared to 1,635 from $1,560. Ether is also rising in price due to its decreasing supply. Thus, the supply of Ether fell in January, which resulted in a net deflationary value of $16 million. Deflation occurs because of the burning, which is the removal of a number of coins from circulation by the creator. In other words, Ether is becoming scarcer. On the other hand, the Shanghai update due in March is expected by the crypto community with some fear. Once staked coins will finally become withdrawable, a large number of validators might want to withdraw their assets, which will seriously affect the Ether price. By the way, Ether, after Ethereum's transition to proof of stake, it might be classified as a security. In such a case, the largest crypto exchanges might refuse to support such coins. When it comes to Litecoin, founded in 2011, it was created to make transactions faster and cheaper than Bitcoin. Litecoin is mined, its emission is technically limited, and the mining reward for a block is regularly reduced. At the same time, the Litecoin network creates blocks 4 times faster than Bitcoin. Both have different transaction speeds. In other words, Litecoin is the silver to Bitcoin's gold. Still, the coin is underestimated. It may well rally into 2023. On Wednesday, it grew to $97.9. Moreover, its halving is scheduled to take place on August 3. A reward for mining blocks will be halved, which will boost its price in the long run. In early 2023, losses occurred from crypto exploits declined by 93%. According to PeckShield Alert, there were 24 exploits of the month. Overall, around $8.8 million were lost. January's figure is down by 68% from December and by 92.7% from January 22. However, despite the relatively quiet month, there is unlikely to be a slowdown in exploits this year. Cybercriminals also earned less from ransom attacks as victims refused to pay ransom demands. In total, in 2022, crypto assets stolen in cyber attacks reached $3.7 billion, up by 58% from the previous year. Last year, cybercriminals mainly targeted decentralized finance projects. This fact boosted cybersecurity awareness among crypto firms. Hacker-related losses accounted for over 95% of all crypto theft. The remaining losses were due to fraud and scams. Thus, the audit of the now bankrupt Celsius revealed that the firm had used new customer deposits to fund customer withdrawal requests for years. In addition, Celsius used customer money to fund operating expenses and bonuses for employees, as well as to cover holes in its balance sheet. Above all this, the Celsius mining division owes more than $23 million in taxes in the US and about $3.7 million in the UK. Meanwhile, BitLata founder was arrested on multiple charges. The firm was closely connected to Hidden Market, a darknet marketplace for drugs, money laundering and a number of other crimes. Our weekly crypto review is coming to an end. See you in a week and take care.